Hello traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 4 o'clock in New York on Tuesday, second day of December 2014, and this is the daily report for gold and silver. To say that this market has had some drastic swings is absolutely an understatement. We're currently trading under $1,200 again, roughly $11.98 is our current print on the screen. Puts it off roughly about $12, $13 on the day with a low of $11.9220 and a high of $12.40. And as I said, currently just under $1,200 at $11.98. Silver, an interesting mix, up about a penny on the day. You can see that slight doji candle that's coming in, and that's because it's had a low of 1600, a high of 1664, trading about 2/3 off of the low today. More on silver in a little bit, but before we get into our show, I do want to announce our special loyalty program, which will begin today on a soft launch to those viewing this video. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, that I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $2,999, $29.99, and this will allow you to have an account really that never expires. Now, with the Loyalty Member Gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the loyalty program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the gold forecast every day. As I said, at minimum, it runs $83 per month, and of course the lifetime, it's going to be much less as the years go on. Again, thank you for your support. So what can we derive really from the most recent activity in this market? And to view that, I've started by pulling up our short-term 230-minute chart. If you recall from yesterday's show, I really believe and identified what I believe to be a critical area, an area that we really need to see the market hold if the market is to begin to move up, and that is 1207. On a technical basis, we can see this activity, this recent resistance, through the mid part of November. Then the market comes down. We did break through that support. That support, I believe, is now resistance. So I believe resistance again is roughly at 1207. Now, where are we finding support? Our current level of support in terms of a minor level has got to be roughly at around the 1180 point. We've talked about this number also before. And so as this market trades, my real question is, will it now not have the ability to break above 1200, because that is a real bearish statement. In terms of any kind of bullish statement, the one thing that we can say is when we look at this dramatic fall to 1131 right in here. Market comes back up and it tests and creates a new low here, but that low is higher than the previous low. So we have the low of 1131, and then we get a low, I believe this was 1142. So we are getting a series of higher lows. Now, we've not seen those series of higher lows. We have seen a series of higher highs, but that has fallen very, very quickly. So we did get a higher high, the high being this former resistance at about 1207. Market comes up, I believe 1220 is where we hit, but now is well below that support level. So what that tells me is we could be range bound in this market, and range bound with some pretty wild swings, because as we get closer to the Christmas holiday and New Year's, the volume will tend to kind of diminish. It will thin out a little bit. And when we get that, we do get an increased sensitivity or an increased potential volatility. And my God, we've certainly seen that recently. Now, of course, we had just taken a look at the very, very short-term support and resistance levels. I've gone ahead and pulled in a half-a-day chart. Of course, 720 minutes, 1440 making up the day. This has our fib retracement from 1255, most recent top that we had, and this bottom here at 1141. And so what we'll see is there is a minor level of support also at 1193. So we have 1193. We also have, call it 1180, 1178. But the one thing that we do get with this particular fib retracement is our next real level of resistance, of course, because we're looking at 1207 as being possible resistance. But if the market can't break above that, the real resistance has got to come in. This is a 76 or 23% retracement, depending on how you set up your fib retracement, and that is at around 1225.81. Realize that our most recent high, I believe, was 1221, so just $4 shy of that. We are on an upward track. There's no doubt since the bottom of this market. I still believe, though, that the fundamentals at play, and once the fundamentals at play, I believe, really kick in, I do believe that there could easily be more pressure to the downside. We'll have to see. As I said yesterday, I really want to wait till the dust settles, because the indications that we got over the last few days were very thin as we got out of the long 4-day Thanksgiving weekend. And so based upon what we're looking at, and especially in the equities markets, let's go ahead and pull that up. We can see, and this of course is the S&P mini, the E-mini, but you can see after a couple of down days, the market has recouped quite nicely back to 2066. So the equities market is right now trending higher. And then when we look at our dollar index, because these are the two markets we have really been looking at to gear some sort of direction, future direction in gold. But if you take a look at the dollar, that has really recouped dramatically, actually trading above the prior top now at 88.66. I believe the prior top was 88.50. That's this particular area right in here. These tops right in here. So we've taken out these prior tops. We're moving to new ground in the dollar. It's not a new high, but it's a new high as of recent. And the equities market is now gaining momentum again as we go into the end of the year. I believe if this continues, meaning a higher dollar and higher equities markets, we will see continued pressure on the gold market, and we could see it then go retest those lows at 1131. So with that in mind, and all things being equal, what is my long-term forecast for the market? Well, as you know, I've been on record stating that we're probably going to see lower prices, and that lower prices is going to complete this fifth wave down. The completion of this fifth wave down, I believe, will signal an end to this major fourth, and then we should see prices begin to move higher. The fact that we really landed this bottom below 61, and it's actually a 50% retracement from the larger move, tells me that there's still that opportunity. We could see this market firm up. But my sense is, all things being equal, if we see a continuation of a strong U.S. equities markets, strong U.S. dollar, gold really has nowhere to go but to complete this final fifth wave 1, 2, 3, 4, and 5, and that if the fifth wave equals wave 1, which is what basic Elliott wave forecasting modeling tells us to look at, is one of our more common ways to project where this fifth wave should go, that would take us just under 1100 to maybe a low of 1180. So the question is 1131 the low and we're going to see higher pricing, or will we take one more stab to complete that fifth wave? And that's going to be the $64,000 question that we need to answer through this month and the beginning of next year. For right now, as I said, I really believe we want a couple of days to have the dust settle, because if we get reactionary on just what we've seen over the last couple of days, I don't think it gives us the proper big picture that we need to look at. Therefore, at least for today, we're going to remain flat with no open positions, and we'll look to gear our strategy as we see this market begin to fall into a more normal pattern, and as we see what the equities market and the dollar is going to do. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow on Wednesday for another daily update review. Bye-bye.